Welcome to etvFutures.com. Today is Tuesday, December 11th. I'm Caitlin Sisney with your Commodities Open. Crude oil rose more than $1 a barrel in New York on speculation that the U.S. Federal Reserve will lower interest rates today to prevent the world's largest energy consumer from sliding into recession. Crude oil is trading at $88.69 per barrel on the NYMEX. Meanwhile, natural gas is trading at $7.04 per million British thermal units. Gold was little changed today, but may rise on expectations that the expected cut in U.S. interest rates will erode the dollar and boost the appeal of the precious metals as an alternative investment. Gold is trading at $813.80 per ounce. Silver is down at $14.815 an ounce. Today we're joined by Mike Fitzpatrick from Man Financial. He'll give his outlook for the commodities market.
Yeah, hi, good morning, Caitlin. The market continues this morning in a pattern that's basically been established over the past week, and it falls on either side of the major divide that is the cleft between those who are holding that supplies are very tight in the we face the core of winter demand, and against those who feel that the economy is beginning to suffer as a consequence of the subprime credit woes, and that will shortly fall into a recession, which will crimp energy demand growth. Yesterday, for example, the second school of thought was held dominance. Today, the former is basically because of the constriction at the ship channel. However, I'm feeling that most people will not take solace in the second school of thought from the news overnight that the large foreign bank has required an infusion of capital to offset $10 billion in losses to their mortgage-backed assets either. On top of this now, tomorrow there's another expectation for a build in crude oil at Cushing, which is now at the lowest level in a number of years. And also because, once again, that pendulum has swung back towards those who are focusing on the tight supplies. Natural gas, on the other hand, that's trending lower, as it probably should, in the face of the fact that we're facing record supplies there, and very little weather around the country to kick up enough energy, enough demand to eat into those supplies. And in view of the fact that we're already a month into the winter, we look to be finishing the season in the spring with quite a good supply of natural gas, and that should drive the price down further. We really believe here that, at the very least, prices in natural gas could fall down to the low sixes at this point. Also affecting the rest of the energy complex is some year-end book squaring by speculative interests who have held unusually high positions in oil. At this point, it's one of the few bright spots on their performance sheets, having suffered some losses in real estate and the stock market. So would tend to liquidate these positions that are profitable to make the performance look a little bit better. However, we do feel that after the new year, they will be back buying with a vengeance.
Thanks, Mike. That was Mike Fitzpatrick from Man Financial. I'm Caitlin Sisney. Join us again for another update right here on etvFutures.com.